trader mindset, how to think about the markets correctly. Here we go.
Where you're willing to stop out. You know this is where you're going to get out. This is enough. You know you're wrong. Let's say it's $99, right? You have to size your position precisely. It's a math game, right? So that if you get stopped, you lose the chosen risk that you were willing to lose, right? Then finally, you want to ask, okay, now that I'm willing to lose 100 and I've chosen the exact amount of shares that I'm willing to, that's going to force me to lose $100 since I'm willing to lose $100. Then you want to ask, okay, but what do I stand to gain, right? And if after all your analysis, your edge tells you, I stand to gain $300 if it goes in my favor, but I'll lose $100 if it goes against me, but I have more than a 50% chance of winning, let's say. You got to take that trade. Even if you lose, you got to take that trade because it's a statistics game, right? Over a long period of time, you'll have what's called positive expectancy. You will gain money no matter what. It's not a matter of luck. It's not a matter of your analysis. It's just sheer statistics. That's trading. That's trading. Again, all those other factors will help. But the key is to understand it's a statistics game, right? Now, why is it important to understand that it's a statistics game? Well, because, the grand reality is, whether you realize it or not, trading is a deeply initiated activity. What do I mean by that? Every time you take a long, you're going long a stock, there is somebody on the other side who's taking a short, right? Whether it's a market maker, whether it's another trader, right? There's another person on the other side. And it's very likely, if you're new, very likely that person is far more initiated than you are, meaning that person has so much experience. That person understands the risk far better than you do. That person has lost a lot more money than you have. That person has a lot of emotion vested into that trade, understands how this game works, right? So if you're new, I just want to make sure, even as you get started, you have to be initiated. You have to understand what you're doing. And so, which is why in the beginning, you want to keep it small. You want to get the game, right? Until you get that game, you want to make sure your losses, whatever they may be, they're as small as you possibly can. There's a learning curve to this, right? It would be ludicrous. And my kids, they're getting into tennis, which is why I give you a lot of tennis examples, right? It'd be ludicrous if my 5-year-old said, why can't I go play like Federer? And starts crying, saying, I'm frustrated. Like, why can't I play like Federer? I would explain to him, well, you don't understand. Federer is a deeply initiated player. He understands the game very well. You're not going to get anywhere near him for a very long time. You got to practice if you have any hopes of becoming like him, right? And the same is true in trading, right? The average learning curve is about 2 years, right? 2 years. So, I would want to challenge you guys if you guys are new. If you see someone, small, FinalBoss or, ACFL or M2, they're making like $3,000 a trade, $5,000 trade. They're posting on the chat. I don't want you thinking, I got to do the same thing. No, there's no way you're going to follow a Federer and just, do exactly what he's doing, right? What I want to challenge you guys to do is let's try to size our positions so that you make $100 this month, right? Then next month you do 200. Then next month shoot for 400. Then 800, 1600, 3200, 6400, 12,800, right? You just keep multiplying 25,000, right? If you just keep doubling every single month, right? If the prior month is positive, okay, it gives you a right to double up, right? So then this month, why don't you play it real small, right? We're talking tiny amount of shares. If you were hoping to get into options, don't get into it yet. You need to get the game first. And options is like a bazooka. It's like telling someone who doesn't know how to use a Glock or he doesn't use a handgun, saying, here, try this bazooka for once. You know what? That bazooka might kill you if you make a mistake, right? So let's not get into options if you're brand new. Just trade with 1 share, 2 shares here, there. Just understand what you're doing, right? Just to get the game, right? And finally, if you can get 2 years in a row, you'll be making a career salary from this, right? And yet, if you make some losing trades, they won't be catastrophic to you, right? So I'm saying this for your well-being. By the way, it should be noted, 95% of traders lose. That's a known statistic. I'm not making that up. That's a known statistic. So if 95% lose, what that tells you is that there's something inherent to our human mind. There's something inherent to our human behavior that prevents us from winning, right? You have to think right in this game, which is why until you can think right, you better make your mistakes small, right? And look, if you don't believe me, go ahead. Ask any initiated trader, any veteran trader in this room. They'll all say the same thing. And secondly, they'll say to you, I wish someone warned me so that I would have gone in smaller at the beginning, right? I promise you they'll answer it that way. All right. So if you're new, keep that in mind. Okay. Now, the key to trading is that successful traders think in probabilities, right? In order to produce consistent results from uncertain probabilistic behaviors, they understand that it's a numbers game, right? So favorable odds is your edge, right? So every time you pull that slot machine, let's say, I'm not a gambling man myself, but if one were to pull that slot machine, right? The casino knows that they have an edge. Like the probability is in their favor, okay? All they know that then is what they need is a large sample size. They want you to pull that lever as many times as you possibly can, right? Because they know the more you pull that lever, the more likely they'll finally win, right? It's the same thing in trading, right? You have a statistical edge and you want a lot of trades. You don't want to bet it all on one trade. You want 100 trades, small trades, right? Then, if you can get that edge and combine it with a large enough sample size, eventually you'll have a consistent, predictable, statistically reliable stream of profits. Although each trade individually is uncertain and unpredictable, from a statistical standpoint, it's the series of trades that is certain and predictable, right? It is a numbers game. Although we don't know trade to trade whether we will win, if you engage in the same behavior again and again and again and again over a long period of time, eventually you will win, right? That's why take a look at the charts on the right. The chart patterns are there not because it's a guarantee 100% it's going to happen. Those are simply technical analysis patterns that have a greater likelihood of occurring, right? This is what some people will say is their edge. It's not personally my edge, but for some people, it's extremely important that they follow technical analysis. They're chartists, right? Right? They have a keen understanding as to the key levels, right? And that's trying to why do they need those chart patterns? Because it helps them improve the percentage every time they do win. That doesn't mean they win every time. It just means they have a greater chance of winning, right? Take a look at the chart on the right, beyond to the right of that. See, some people risk $50 to make $1. But in order to do that, you will win often. But in order to become a profitable trader, you need to break even. In order to break even, you need to win 98% of the time. And the reality is most newbies play this way. They'll bet an inordinate amounts of money to try to eke out that $1 green. And they think, I'm winning a lot. Look, I'm such an expert. They'll win 95% of the time, but they'll still be a losing trader, right? If they risk $10 to make $1, you have to be right more than 91% of the time. A lot of scalpers are kind of like this, right? They're risking $5 to try to make $1, and they're right 90% of the time. They just have to beat 83%, right? The reality is most of us aren't like that. It's too stressful. And when you make that big loss, you have to have the psychology mindset to just take the loss with grace, right? Most people don't have that ability. That's why here, I know FinalBoss and we try to strive for you risk one and you reward two, meaning for every dollar I risk, I want the chance to be able to win the $2. I just have to be right more than 33% of the time for me to break even. More often than not, I'm right 60 to 70% of the time. I'm not always right. I'm right 60 to 70% of the time. But if I strive to make $2 for every $1 I risk, I will certainly be profitable over a long period of time, right? There are some traders, in fact, they're pros. They make 6, 7 figures, sometimes per day, some especially, surely per month, and they have a win rate of 30%. Okay, like think about the psychology of how that will feel. When you're losing all the time, but they're 6 to 7 figure traders. How is that possible? Well, it's because every time they lose $1, but every time they win, they're making $10, right? And then they have a 30% win rate. So that's why they're making such inordinate amounts of money, right? They risk so little, but they gain so much when they do win. Right? Hopefully that makes sense, guys. Think about this also. The chart on top of that, you have what's called the win rate, right? I said I have about a 60% win rate. Okay, so if you look at the 60% win rate, and then you scroll right with your eyes, what this chart is telling you is that you have a 100% chance, 100% chance that you'll have a 3 consecutive losing trades in the next 100 trades, right? So if I take 100 trades, I have a 100% chance that at some point I will face 3 consecutive losses in a row. Let's say you're saying, well, I'm not that good. I still have but a 40% win rate. Did you know you have a 42% chance, okay, that you will lose 10 times in a row? Right? You have a 42% chance you'll lose 10 times in a row. So why are you risking the entire account if you have a 42% chance you lose 10 times in a row? Right? You should be risking a very little amount, because when that does happen, you need to be able to weather that storm, right? You need to be able to weather that storm.
Thanks for watching today. Don't trade alone. Consider joining us at Oimba Trading, where we do this daily.